right, so how you doing, guys? This is my first video on YouTube. This is going to be the first of many, I believe. I'm going to be, uh, first of all, in this video is serving two purposes. It's going to be showing off the indicator that I made using the ICT Trader concepts and showing you how it works and showing you the different things that you can do with it and ultimately showing you how you can get it. And just some different things to consider and how to make sure it works the best that it can. The second reason for the video is I'm going to be posting videos pretty regularly. I hope to be keeping tabs on myself as far as making sure that I am sticking to what I'm supposed to be sticking to, kind of recapping my own trades and keeping an eye on it. Because I've been doing this now for I've only been doing ICT uh, strategies for probably the last 3 months, and so I'm relatively new at it. And of course, it's not too hard to understand, but there are some elements to it that you need to consider. And so, me posting on here allows for anybody who cares to watch and care to comment to help me through understanding how to perfect this as well. Because the indicator does exactly what ICT teaches, but you can't really just run it on a bot without having some kind of a you gotta somewhat control it, because really if you're just gonna have every single bearish and bullish signal get traded, then you're really, I mean, you can still make money with it. That's the cool thing, is you can still make money with it. It's just obviously it's not going to be as effective. But anyway, I'm not going to ramble on any more than that. I'm just going to go into this. So this is, you're seeing right now, the indicator that I use for ICT. I made this to be able to visualize the liquidity grabs and the turtle soup strategy. As you guys know, if you watch ICT, you know what the turtle soup strategy is. And it works on all time frames, which is cool. I've got it set up so that no matter what time frame you're going to be looking at, it's going to obviously just be using those bars, those candlesticks, to be able to determine whether or not it meets the criteria. So I think it'd be really important to first go over the criteria to make sure that it's understood what each of these signals are going to be looking for, and well, what each of these signals are going to be showing, really. So this is, pay no attention to these white and red lines right now. You're going to get kind of confused. You know what? Let me turn them off for you. Yeah, let's turn those off. All right, we will talk about those in a little bit. But yeah, so this is the raw indicator without the stop loss and take profit in there. So what you've got here is this is a bullish signal. Obviously, it failed, but that's why I'm saying you got to keep in mind what the overall context is of the market. But I want to show you what it is regardless. This is the equal highs. You can see here it says EQL, and that is standard for, obviously, for equal lows. So you can adjust how the equal lows are calculated, and I'll show you that as well. But for right now, just see that this is the equal lows. Once at least, well, I have it set so that at least two candles represent that equal low, and then once it comes down through and then comes back up strongly, so obviously you've got your fair value gap within this range here, and then continues to push through. So this MSS stands for market structure shift, and you can actually decide. You can see where it says filled here. You can actually decide. I mean, this is probably most helpful if you're doing this to run on a trading bot, which is originally why I had this built. Uh, but you can decide how much of that fair value gap you want to have filled. Now, in some cases, obviously, you've got more than one fair value gap. This is a perfect example here. So in this one, we've got your equal lows here, and then this is your market structure shift. This is going to be, well, I don't want to go too much into detail as far as what it represents, because obviously I don't want you. I don't want to give away all of my secrets as far as how it's coded. But basically, you got your market structure shift. It's obvious why that is though. And then you can, obviously see that it comes up and you've got three separate fair value gaps here. The only fair value gap that we're going to worry about, because it's the only one that takes into account for filling it, is the most recent one, the one that exits the market structure shift. If that makes sense, I hope it makes sense. So once it exits once it changes the structure of the market, then that fair value gap is going to be the one that's going to be filled in. And again, like I said, you can decide at what point you want it to be filled in. And I mean, I personally have found that, oh yeah, and by the way, if you really don't like that it's only filling in the top one and it's only giving you the option for the top one, I had no reason to go further with coding it any differently because when I had tried coding it for all of these, if you could get down too far into this, it usually, I mean, I turned this indicator into a strategy as well, and the strategy was just showing that it wasn't nearly as accurate when you're going into these anyway. So I'm not going to be doing that. I am open to suggestions if you want to have anything different in here. I'm not going to be doing like kill zones and different time zones and things like that. But if you have anything you wanted to add to it once I go through this, then obviously feel free, and maybe I'll do some changing. So anyway, yeah. So it comes down here, grabs that, and then that's when you would get into your um, into your move. So that's e- everybody who's here probably already knows all of those criteria, but that's how the indicator is judging when to actually flag the signal. And so that is the gist of it. So, I mean, obviously, there's going to, oh yeah, by the way, I don't know if I don't think I mentioned this. The X represents where the liquidity grab is, by the way. It doesn't, you can't, it looks kind of deceiving. You're not going to be able to grab the bottom for a bullish move, and you're not going to be able to grab the top for a bearish move because of that X. It's just not something that you can do because all the criteria hasn't been met yet. Obviously, in hindsight, it looks like it, but it hasn't yet. But obviously, like I said, depending on the context of the market, you're going to want to decide how to use these. I have a couple people that are using this just as a visual aid. So they have it. There's one guy that I know that he's using it as just a visual aid on like all the different time frames, so that you can catch if a higher time frame has a bullish or bearish signal, and then using that to determine if the one in the lower time frame is valid. And that's a pretty cool way to use it. But you can see here that you've got this move here, which obviously came down and it was a good trade. Uh, any indicator, any indicator is going to have a hard time in a choppy market. So, you can't really give it a hard time for not giving perfect trades. Obviously, I think ICT himself would say even if you were in looking at the market in context, you're still not going to get every trade. So let's go into the actual indicator and we can look at some different things that you can change on it and see what we can do. So, okay, so here's the threshold. The threshold, again, without going into detail as far as how this is coded, the threshold essentially just determines how much it's going to allow for wiggle room for your relative equal highs and lows. Because obviously we already know that the equal highs and lows are not going to be exact numbers. You just want them to be relatively close. Essentially, that's all it is, and basically you can move this up and down to whatever number you want. I personally have found that in the ES and also in the Nasdaq and in the Forex market actually, that zero point 0.5 seems to be the best one. You can play around with all you want, but that's what I've found. The minimum number of candles obviously is for the equal highs or equal lows. So it will take into account however many candles you want. If you want to move it up to three, just so you know though, if it takes three into account, it doesn't mean necessarily it's going to be more accurate than two. It will definitely take less trades, but it does not mean more candles doesn't mean it's going to be more accurate. Again, I have this as a strategy, and I can see that what I have here, I have for a reason. But regardless, here's the number of candles to wait for a market structure shift. So after 12 candles has gone by, so if there's a market, if there's a equal high, equal low, and then a stab through, if there's not, if you don't have 12 candles in this particular setup, the way I have it for 12, then it's not going to it's not going to show the market structure shift, and obviously it's not going to show the signal at all after 12 candles has gone by. So if it's just a, well, again, I don't want to go into the code, but so then you can use the moving average to filter the trade. So this is kind of cool. I mean, I basically just put this in here because some people really just like to trade off from the 200. You can change whatever, you can change this to whatever you want. You can change it to 100, you can change it to 50, you can change it to 10, you can change it to whatever you want. But basically, if it's below this EMA, well, I have it as an EMA right now. If it's below this moving average, it's only going to show you bearish trades. And if it's above, it's only going to show you bullish trades. Just so you know, though, it's using the market structure shift, not the equal highs or equal lows to determine that. So if the market structure shift is below the EMA or the moving average, whichever one you choose, then it will show you the bearish, even if the rest of it's above, just like this. Personally, I like to see everything. I don't really want to have the moving average decide for me, so that's what I want to see. And then, of course, you have your different ways of being able to decide what exactly that means. So you can change, you can change all that. You can also change what kind of a moving average you want. That's for you. Like I said, I did that for you guys because I know a lot of you like to do that kind of a thing. You like to use. I know a lot of people like to use the EMAs, the 200 EMA for bearish and for bullish. So so this is basically setting only the fair value gap to trigger if it's from the last one. So basically, what this is if we have a bearish signal come up and then a bullish signal comes up, or even another bearish, it's not going to it's not going to come back up and fill up here after another one has already signaled. Again, this is really only for if you're trading on a bot. That's the only thing that really matters, I guess. But either way, it's there to make sure that if you don't want it to trigger after, and honestly, guys, again, I have all this set up the way I do for a reason. Take it for what it is. If you find that there's something I'm missing here, then obviously feel free to tell me. And then show all trades. So this is more along the lines of what ICT would be teaching. Okay, if you're going to be doing this on a bot, and there's a very clear trend direction. Right now, there's not. That's why you're seeing all these crazy. Uh, First of all, that's why you're seeing me in a 1 minute, because the choppier the markets, the lower the time frame I've found needs to be in order for this to be most profitable. So if it's less choppy, then I might use a 5 minute, and if it's less choppy than that, I might use a 15 minute. I tell you what, there was about a month ago, there was about 2 weeks straight where the chop was big enough to make it so that when I had my 1 to 2 risk to reward ratio, my 15-minute chart was basically, I mean, it was nailing almost every single trade. It was insane. Um, I had both bullish and bearish on, and it was doing really well in the 15 minute. So this, though, you can decide if you only want it to show longs or if you only want it to show shorts. And then that allows it so that if you have this indicator set up to a trading bot and you know that the, the direction is most likely going to be going up, you can only have it trigger the bullish trades. So that's honestly one of, I think, the most helpful things on this indicator. So this is just the colors, and then so here is where you can decide if you want to have. You can have up to 3 trades taken. You can do a fair value gap fill for, let's say, 10%, 50%, and 100%. You can have up to 3 fills. I only do one, and actually I don't even do 50, so pay no attention to that. I actually have found that 10% is a pretty good one to use. So so you can, and then each of these are just so that you can put in your JSON for your triggering your alerts, so that way you can put this on the trading bot. Same thing here. This is just, I'm sorry, I forgot to tell you. So this is longs, and then this is shorts. So I separated these out so that you can have them each being um, set up. If you want to change that, if you want to have the longs be different than the shorts as far as the alerts, then you can do that. And then this is the stuff that I think most people are really going to care about. And this is the way that you're going to be setting up your stop losses and your take profits. So uh, I'm not going to go into how each indicator works, obviously, because I mean, if you don't know what an ATR is, then maybe you're not in the right video. But this is using an ATR of 100. I found that to be a really good place to be for the length. So the swing length, this is basically just counting back. So if you want to use, okay, so you have the choice of using your stop loss or your take profit using, or I'm sorry, not, yeah, I'm sorry, your stop loss and your take profit using the most recent swing high or low. And the way that you're going to calculate that is based on looking back however many candles you want to look back. I have it set back to 10 again just because that's what I've found to work best. So it will look back to the last 10 candles, and it will decide based on that if whatever the lowest candle is, it's going to use that for your stop loss. And then here's your max risk. This is a very helpful, very, very helpful thing. I actually don't normally put that there. I usually normally put that at 0.5. So I normally would have that at 0.5, and that'll make it so that if you have it set up to where your stop loss, let's say you have let's say it's FOMC day, and it just goes crazy and it goes 100 points, you're gonna have a really huge, I mean, probably a stop loss that if it gets triggered will maybe wipe out your account, depending on how you're setting up your trades. So you can make it so that it has a limit here of what you're going to allow to happen there in case that volatility does come. What to do when you get single opposes. So if you have, and again, this is for a trading bot. This doesn't apply to you unless you're using a trading bot. Uh, you can make it so that it either reverses or it ignores the signal. So that way, if you've got a bearish trade here, and then you have a bullish trade down here, you can have it so that it doesn't reverse on that bullish trade. It will just ignore it and just keep going until a stop loss or a take profit is hit. Again, I find it helpful to leave it on reverse. Oh, and also, by the way, guys, this is just the indicator. The strategy is a whole other thing. So that's actually what's going to be doing all this stuff. So if you wanted to purchase this, you'll get both the indicator and the strategy. I just personally like to put the indicator on the chart because I don't like all the I don't find it helpful to have all the entry and exit uh, arrows on my chart. It just clutters it up. So I like leaving this one on here. So all right, so then you have your take profit type, and I don't know why it's on ATR because I do not use ATR for that. I mean, usually I don't. If I'm feeling saucy, maybe I don't know. So what I usually will do is I will do a take profit at the swing distance. And so what that will do is that will take whatever your swing. And the reason why I do this though is because I also do this for the stop loss as well. So the stop. So let's start there. The stop I do as the swing distance. So that's going to measure again, like I said here, the 10 candles back, and then your stop distance multiplier is 1. So that means that wherever your low or your okay on this particular situation, it's the highest point in the last 10 candles, right on the money. But what I will sometimes do, most of the time, what I'll do is I'll leave this at 1.1 because what that will do is that will pull this up. See how that pulled that up? So it pulls it up so that way it's just barely above the most recent swing or below, depending on bullish or bearish. So that will help. I have found that 1.1 is good because sometimes what will happen is another you'll have another swing. You'll have another turtle soup where it comes up and grabs liquidity. And if you do a little bit of a buffer, then you can still stay in that trade. So that's why I leave that at 1.1. But what I'll do is for the take profit is I'll do a swing distance of 2. So we've got a 1 to 2 risk to reward ratio with a breaker here, making sure that I don't risk more than 0.5% of my portfolio. Just this alone right here is great. I mean, it's really, really, really powerful. But there is more. You can also do a percentage. So if you wanted to do it just by percentage, you can do whatever you want as a stop loss or a take profit. That's self-explanatory. So this, you can also enable a second take profit. So basically what will happen is if this is checked, then whatever your first one is, so let's say a 2, it'll take off whatever you want it to be, 50% of 50% of the position that you have, and then all of this applies right here for the second take profit for what you have left. Obviously, 2 is not going to apply because that's the same as this one. But either way, you see what that is. I personally, again, this is swing distance actually, but I personally, I left this on. I did. There's a few things I did here specifically for you guys because I know that people have different ways of trading, and I want to allow you to be able to be flexible in how you do that. So so the stop percent, so that's if you wanted to use the percent on the stop instead of the swing distance, and then the stop distance multiplier I already showed you. And then here is, I guess, trying to make sure that you're not leaving anything on the table. So, oh, I'm sorry. Actually, first we add the take profit even if the risk is too much. So I like to uncheck that because if it is too much, I'm not going to have it. I'm not going to have it trade. Uh, And then, so yeah, so then we've got use a trailing stop loss once the price hits the last TP. So if you don't have this check marked, it's going to use this. So once you hit the 2 multiplier from the swing distance, if that's what you have checked like me, then you're going to have this automatically start once you do that. So you can do one of two things. You can either have it so the trailing offset is by ticks, which in this situation would maybe be something like 8 or 4. So 4 would be, 1 point behind. So basically as soon as your 2x multiplier, your 1 to 2, once your take profit is hit, it will not take that trade off the table at that point. It will instead, in this particular situation, it will instead use the well, if that's not checked, it will use the 4 ticks behind it and then trail it. That's really good for when you have a lot of volatility. Obviously, you got to take the good with the bad when you do something like this, but I have found it to be very helpful. Personally, I don't use the ticks. Again, putting options on there for you guys because I know you guys want to use different things. I like to use the ATR, and so one thing to keep in mind with this ATR though is I don't have it set up so that it's an ATR like if you were to set like the super trend on this chart, it will not match that. It will not take profit at the exact same place uh, that you see it on the chart from the super trend. And the reason for that is because the super trend is using the close of the candle to determine where it's going to lie, where it's going to sit for the remaining, until it gets hit or it moves more. I'm using each tick. So whatever, so if you use a 2.5, I mean 2.5 is pretty common. So if you use a 2.5 ATR, it's going to follow it. It's going to follow it, but it's going to follow it per tick, not for the close of the candle. I'm not going to hash that, but I just wanted to make sure I pointed that out. And then, so these are just the colors. You can change the colors. You can make it however you want it to be, and that's about it. This is obviously available on all the charts. So this is a really cool indicator. I'm telling you, I've found this to be extremely, extremely useful. Let me see if I can find back when we were range bound, and this was, well, we had a 15-minute chart. Look at the chop on this though. I mean, for real, look at the chop. And this, see, this would have been a perfect chance. So I actually, let me just show you an actual example of how this is used. So once this broke above this line here, I won't go into why that line is there, but once it did, I actually changed this so that my trading bot was only taking bullish, because I had it where it was taking all the trades, but only taking bullish trades at this point. And so very, very good setup once we got up there, and it wasn't taking those bearish ones because it's now looking much more bullish. And I actually think that this next week we're going to be pulling up more into this probably like 4,300 area before we maybe come back down. Who knows? But I want to see if I can show you guys where. Uh, did I leave that on long? Yeah, I did. I, oh, it wasn't in February. It was in. Yeah, it was actually in this area here. So this area here, when I left it on all trades, it was doing really well. Of course, it's not every trade, but it was doing really, really well. So we had this, and of course, you can't have an indicator that goes back that far and show all the details, but you'll see where it did where it did the signals. So we had a trade here that came down. That was a good one. This one wasn't good. Obviously, this one wasn't good. This one actually was good because I was using this as the stop, and this was a good one. This one was not a good one. You can see, yeah, this was a good month for me actually. This was a really good because it was about, I think it was 2 3 weeks. So anyway, you can see here that the 15. Actually, you know what? I also do like the 10-minute chart as well. The 10-minute chart is nice because it's right obviously in between the 10 and the 15, or I'm sorry, the 5 and the 15. So it kind of gets those in betweeners, and you can have some fun with it. But anyway, again, tweaking this to whatever chart you're on is going to be really crucial. This setup that I just did is actually not as good on the NASDAQ as it is on the ES. So you have to set that up to the particular chart for how volatile it is in order for it to be the most profitable. And if you get this, all you gotta do is you gotta just write a comment, or you can email me. I'll put the email down in the description box, and you can request it. So once you email me, I'll send you all the information as far as pricing and all that good stuff. But as far as putting it on a trading bot, this thing is really, really doing well. Uh, Especially when you have a market that's moving and you can actually just go ahead and do what you're supposed to do. This is not, I'm telling you guys, this is not one of those indicators that you just set it and forget it. You're going to want to make sure you're keeping an eye on the market. You're going to want to do your own analysis, figure out what you believe is going to be happening based on your bias for the daily bias, and set the trading bot to only take the trades that make sense to that bias. I know that it would be wonderful if we could just set it, forget it, and just have it turn into an ATM for us, but it really isn't going to work like that. So I hope that you guys like this. Like I said, I'm going to be doing my own analysis, self-analysis when I take my own trades. I'm not an expert. I'm not an expert. I have only been doing this for a few months. Uh, I've only been doing ICT for a few months, uh, but I've been having fun. That's why when I watched his videos, it clicked so. I knew I had to make this indicator because it clicked. I really felt like it made sense as far as what he was saying, and I just wanted to make it to where people could use those concepts to make some money. So anyway, hope you guys enjoyed it, and I hope that you subscribe and you can help me out through future videos and your analysis of the market. We can take it from there. So thanks a lot for watching.